The International Monetary Fund, IMF, predicts global growth will slow down to 2.7% in 2023. According to IMF, the worst is yet to come, and for many people, 2023 will feel like a recession. However, this upcoming recession could be a once-in-a-generation opportunity to build wealth, because now could be one of the easiest times to significantly increase your net worth if you know what you're doing. After all, there's a popular saying that riches are made in recessions. 9 out of 10 CEOs are preparing for a recession, and 97% of CFOs are cutting costs by 10%. JP Morgan has warned that the stock market could fall another 20% from its current level. Even though a recession sounds like a gloomy prospect, recessions happen on a regular basis. In fact, there have been 6 recessions since 1980. The 2020 recession caused by the pandemic was the worst in 40 years, with the market falling 14.7%. However, consider the market state since then. By the end of 2021, the S&P 500 was up 20%. In fact, the average 2 years return after every recession for the last 40 years has been on average more than 10%. This shows that, if used correctly, it is possible to set yourself up for the rest of your life by taking advantage of some incredible opportunities and discounts. According to billionaire investor Warren Buffett, the bad news is an investor's best friend. On average, modern recessions last about 10 months. The Great Recession lasted about 18 months. With that in mind, let's go over what's expected to happen over the next 1 to 2 years and what one can do to ensure they're in the best position to make as much money as possible. First, let's talk about the recession in general. Recession refers to a period of temporary economic decline during which trade and industrial activity are reduced. A general consensus among economists is that a recession is identified by a fall in GDP in 2 successive quarters. A recession is also characterized by a significant increase in unemployment, a drop in wages, a loss in consumer confidence, and a decline in values across the board, including food, energy, and services, with long-term consequences for the global economy. Every quarter, companies report their earnings and provide future guidance. During a recession, companies forecast declines in revenues, and slow or even negative growth due to uncertainty and risks. When consumers earn less, they spend less, and when businesses see less demand, they begin to cut back on expenses and lay off their employees. According to recent reports by Bank of America, the U.S. economy will begin losing 175,000 jobs per month during the first quarter and will continue through much of 2023. Now that you know what a recession is and how it affects the economy, how can you use this information to grow your wealth? If you're enjoying the video so far, please subscribe to the channel and leave a like. Until recently, it was assumed that cash was wasted away due to inflation. But when all other assets are losing value, cash may be the safest place to store your wealth. Many people overlook the fact that cash was the best performing asset in 2018. If you had simply saved your money in a high-yield savings account, you would have outperformed the market by a large margin. A high-yield online savings account, for example, pays you interest on your cash balance. And, like a savings account earning pennies at your local bank, high-yield online savings accounts are easily accessible vehicles for your money. Cash is now such an important part of the portfolio that even fund managers have more cash on hand than at any time since 2001. Next is real estate. Lately, the housing market is in decline on a national scale. There have only been a few occasions in the last 60 years when prices fell by more than 10%. However, according to Wall Street analysis, housing prices may fall by another 7%, with worst-case declines of 10 to 15%, if interest rates continue to rise. Every market will be different, and according to Moody's Analytics, the most vulnerable markets, including Florida, Arizona, Idaho, and Southern California, could see a more than 25% drop in price from their peak. The decline is expected to last another 12 to 18 months before bottoming out. On the equity market, the stocks are currently down between 20% and 30% on all 3 major indexes. and JP Morgan analysts predict another 20% drop from current levels. Since 1946, the average bear market drop has been close to 30%, with the most severe occurring in 2009, when the S&P 500 fell 57% from its peak. In comparison, the current market is down by about 25%. The capitulation of investors across the board marks the true bottom of the market. And that is usually when the recovery begins and the market sets to improve. Every bear market is followed by a bull market. According to Yahoo Finance, historically, the S&P 500 has fallen an average of 29% during a recession. Once stocks have reached their low, their average return the following year is 40%, and the market has increased by 58% on average over the next 2 years. This means that investing on the way down is far more profitable than withdrawing from the market and waiting. Long term, the market always recovers. During a recession, everything becomes less expensive. Even though it may appear that this is a bad time to invest because everything is falling by 30%. A wealthy individual would see this as an opportunity to purchase those same companies at a 30% discount. Reframe your thinking because a falling market could work in your favor. In reality, when times are tough, businesses cut back to save money and play it safe. However, this opens the door for smaller, more aggressive companies to emerge and take their place. One study of 16,000 companies found that those who continued to advertise and raise their values saw positive growth a year after the recession ended. There are far more opportunities in a downturn. Recession is the market's method of weeding out the weak. In normal times, the largest companies have access to all resources, making it difficult for smaller companies to compete. However, during a recession, the economy has a way of clearing out many companies, by bankrupting those that can no longer sustain themselves. And this allows smaller businesses to continue to grow. Acting at the right time is essential to make money during the recession. But the truth is it is not always easy to identify a recession. For example, the Great Recession began in December 2007 but was not officially declared until December 2008, only a few months before it ended. Back in 2001, the recession began in March, but it wasn't declared until November of that year. There is a 6 to 12 month lag before we realize we are in a recession. With all this information, and while you are preparing yourself for the recession, what can you do to maximize your profits? Reduce unnecessary spending while continuing to invest as much as possible in the market. Consider what you would do if your income dropped by 20 to 50%. How you would make a difference and whether you could take preventative measures in advance. Keep some cash on hand. Maintain your career. At the end of the day, this is going to be your best hedge against whatever happens. Your worst case scenario is that the market goes down, and at the same time you lose your job. In such a situation, you may have to sell off your investments at the bottom, before they have time to recover. Learn new skills and focus on what you're already doing. In terms of long-term investing, try to act as if nothing is happening, and simply continue with your regular investments. The most profitable strategy is dollar cost averaging or investing in the market on a regular basis. Diversify your investment portfolio. Add large cap, mid cap, and international stocks to your mix of stocks. Also, invest in real estate through index funds. Once the market has flattened, there is a lot of value in continuing to invest regularly, holding some cash on the side, starting a new business, and investing in real estate. Also, double your efforts, start a side hustle, and learn new skills. The coming months will not be easy, but those who are prepared for them will be rewarded. If this video was useful, please consider leaving a like and subscribing to the channel for more content. Leave a comment on how you are preparing for the upcoming recession. Until next time, stay safe.